Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last two videos I have completed the meaning of the term risk and then what is enterprise risk, what are the different types of risks. Now in this video I am going to explain you two more topics, that is risk identification and risk assessment or measurement. In the previous video, I've explained you that there are three aspects in risk management. The first aspect is regarding the identification of risk. The second factor is regarding the measurement or assessment of risk. And the third aspect is the risk management or risk control, how to control the risk. So these are the three aspects in risk management process. So before explaining in detail regarding the risk identification and risk measurement, take the screenshot of the points, then I'll explain. Now, first of all, risk identification. This is the very first part in the risk management process. Identifying the risk. Without identifying the risk, we cannot be able to measure it, we cannot be able to control it. So first of all, identification. One point you remember, that risk management does not mean that we are eliminating the risk. Risk is always there in the business. In every business, we cannot eliminate the risk. The only thing we can do is we can minimize the risk, or we can bring the risk to that level at which we can be able to afford. So ensure that risk remains at a predetermined level of acceptability. So already we have fixed a predetermined level of acceptability and check that our risk is within that predetermined level of accountability. Otherwise, if risk increases, that means the return will also should also increase. If our returns are not increasing but simply risk is increasing, that means our management policies are not right. Now, secondly, one point you have to keep in mind that risk and return go hand in hand. That means there is direct relationship between risk and return. Higher the risk, higher the return. Lower the risk, lower the return. So if a business firm does not want to take the risk, then definitely the returns will be lower. Then if you want to increase the return, simply you have to undertake the risk. You have to measure the risk and you have to control the risk. Now, risk rarely happens as an accident. Remember, risk will not occur as an accident, or all of a sudden risk will not come into the business. There are some symptoms which shows the risk of the business. So a business organization must know what are the sources, that means what are the symptoms of risk, what are the indicators of risk. By seeing that indicators, by seeing that symptoms, the business has to take some preemptive action. So prior some loss took place, the business has to evaluate what are the actions we have to take so that the loss should be minimized. Now, identifying the common and crucial risk is the initial step in the risk management process. Just now I told you the first aspect in risk management is identifying the crucial risk which every business have to face. So what are the indicators, how we can be able to know that risks are there? The first is questionnaires are distributed to know the opinion of risk managers. In every management, risk managers should be appointed and the questionnaire should be distributed among the risk managers and get the feedback so that we can be able to make the plan for protecting the business against the risk. So first thing, making the questionnaires and distribute it among the risk manager and get the feedback. Secondly, companies need to investigate physically with regard to their operations. The risk managers are there. They have been given questionnaires feedback is received. Now physically the management should observe what are the activities conducted by the risk managers. Thirdly, the firm's financial statements. The financial statements provide lot of data regarding the liabilities and assets. By analyzing, by scrutinizing the financial statements, we can be able to know where the risk may arise, what is the possibility of risk for different assets. Example, physical assets like land and building, plant and machinery, furniture, computer equipment, fixtures, or stock, or trade receivable, or cash. So many assets are there. By scrutinizing that, we can be able to find out where the risk locates. So various risks faced by stakeholders like the customers, key suppliers, and depending on this, decisions are made to preserve the assets and prevent the losses. Ultimate aim is to prevent the losses or protect the assets. So time to time, the management has to scrutinize, analyze the assets and liabilities so that all the assets are protected and losses should be minimized. By evaluating the flow chart, a flow chart should be made regarding the flow of production and how many units we are making, how many units is the demand. By making the flow chart of demand, production, and number of units, we can be able to control the stock. The company, the business should not have overstock, should not suffer from shortage of stock. Adequate stock should be maintained so that the money should not be unnecessarily blocked in the stock, nor the customer should be dissatisfied by not having the product on time. We have to supply the goods on time, and also we have to check that sufficient stock will be there. Otherwise, a risk of loss. If customers are not satisfied, we will lose the opportunity of getting more profit. Similarly, if unnecessarily more heavy stock is kept, we are losing the money of interest charges. Idle money will not generate any income. So this is the risk. This is also one of the indicator. Next one is based on the historical data and past experience, risk can also be ascertained as follows. So a business organization can analyze the past data, or according to the experience, they can find out what are the risks in different areas, like risk to human resource. In every organization, human resource is the most important factor of business, of production, a resource. And this human resource should be carefully utilized. A business will be effective when it can effectively utilize, efficiently utilize the human resources. There is change in the human resources due to dissatisfaction, retirement, or resignation, or layoff. All these are the causes. Identifying the retirement or unemployment or death or disability of key employees. So what are the risks exposed to the business on account of human resources? It has to be analyzed. We have to make the plan. If some human resources are discharged or resigned, then what will happen? What is the effect to the business? Next one, crime losses like robberies, theft, dishonesty, fraud. There is a possibility that there may be a theft, there may be robbery, there may be a fraud taken place. These are the possibilities. Even if they are rare, but there may be possibility of crimes. So business has to protect itself against these potential crimes. Next one is property loss such as furniture, building, computers, and account receivables. These are all the assets used in the business. The company has to protect the assets, protect the furniture, protect the computer equipment, protect the machinery, all these things, and also account receivable. Account receivable means the amount receivable from the customers on credit sales. When the business sells goods on credit, the credit customers are called account receivable. Now the business should take severe action seriously regarding how to collect the amount from the customers. The credit control department should be effective. Otherwise, there may be a loss of account receivable. Next one, business income risk like extra expense, unexpected loss, and loss of business income. See here, Business losses, income losses. There may be a possibility that all of a sudden there is an unexpected expense, or there's a possibility that all of a sudden the income may be slashed, may be decreased. So these possibilities should be considered by the business to protect the business. Next, external is risks such as foreign currency risk, political risk, and act of terrorism. These are possible even if they are rare. That external risk like foreign currency risk, that means if a business is dealing in foreign currency, import and export, the business is exposed to foreign currency risk. Apart from that, interest risk, the government policies may change due to which there is a risk. So if business has to evaluate that what are the effects to the business from these external factors, and before that the company should make some provisions so that these external losses should be minimized. Example, there may be a loss due to foreign currency risk. The business must make a reserve, a foreign currency fluctuation reserve. One reserve is kept. So whenever there is a loss on foreign currency, this reserve can be used to absorb that risk. Like this, some plans should be made. So these are the identification areas. Now what I have explained, that how to identify the risk. Risk will not come all of a sudden. There are some symptoms of risk, indicators of risk. Every business has to evaluate what are the possible areas where business risk may arise, which will put losses to the business. Only after identification, we can be able to control. Next, the next topic in this video is regarding risk assessment. The meaning of assessment is measurement. After identifying the risk, the second aspect is measuring the risk, calculate the risk. So here, after risk identification comes the crucial step of risk measurement. This implies quantification of possibility of loss. Risk assessment means risk measurement, which means quantifying, calculating how much would be the expected loss to the business on account of this risk. Now, the risk assessment and measurement require the basic understanding of statistics and probability. Now see here, in order to calculate the risk, the management must know some basics about the statistics, about the probability, because by applying the formulas we have to calculate, we have to assess the risk. So basic knowledge of probability and statistic is required for calculating or measuring the risk. Next one, risk management is most effective when managers and employees are attuned to risk. It cannot be imposed. One thing you remember, in the previous video also I have explained you that risk is an integral part of the business. It cannot be removed. That means whenever there is a business, there is risk. So every manager in the business must know it. The management must make all the managers attuned to risk. Risk should not be imposed. That manager should not be explained that we are having so much of risk. No, already they must know it. So the business, the company should educate the managers that we are exposed to risk. We have to take effective steps in order to minimize the risk, control the risk. Now, a business should identify and assess operational risk inherent in all the material, products, activities, process and systems, and its vulnerability to the risk. The important part of the risk, type of the risk, is the operational risk. Operational risk is the risk of malfunctioning of the activities of the business. Example, in a business organization, so many different activities are there, like purchasing, production, marketing, finance, human resource. All these are the different functions of management. If there is malfunctioning in any of the department, that gives rise to operational risk. If the business is completely structured, formal structure is there, everybody knows the responsibility and authority, what are the risks in their areas, then what will happen? The operational risk will come down. So there should not be any haphazard way of doing the things. All the activities should be planned, should be prepared. Then operational risk will come down regarding the products, regarding the material, regarding the activities, processes, systems which are vulnerable to this risk. And a business should ensure that before new product activities, process and systems are introduced or undertaken, the operational risk is inherent in is subject to adequate assessment procedure. So what it says is, before introducing a new product, before implementing a new procedure, before introducing a new system, it has to be analyzed. From different angles, it should be analyzed that what are the possible risks attached with this new product, with this new system, with this new procedure. So beforehand, we have to analyze the risk involved in every product. That also comes under operational risk. While number of techniques are evolved, operating risk remains the most difficult. There are different procedures of controlling the risk, but controlling the operational risk is very crucial. The biggest risk is the operational risk. So many companies collapsed mainly due to lack of control of operational risks. So operational risk is very, very important. Now, accurate and timely measurement of market risk is necessary for proper risk management and control. The second part of the risk, which is very crucial, is the market related risk. External risk, the risk which comes from outside, from the market, like government policies, interest rates, exchange rates, all these, and people's preferences, likes, dislikes, competition in the market, all these are external factors which make some risk to the business. So this is also very much crucial, and every business management has to plan what are the consequences of these external risks, how we can be able to combat those risks. Now, there are a wide range of risk management techniques which business organizations apply to measure the risk. The most important are VAR and CR. Many techniques are there in order to measure the risk, but the most important, very frequently used techniques of measuring the risk are VAR and CAR. VAR, it is called value at risk. The full form of VAR is value at risk, is a statistical concept. Statistical formula is there to calculate VAR. By calculating VAR, we can be able to measure the risk. So risk measuring technique is VAR, which is very widely used specifically by financial institution and generally by every organization. More specifically, VAR is used by the financial institutions like banks, insurance companies, mutual funds, investment companies. These financial organizations very frequently they'll use VAR. What is VAR? It's an attempt to answer the question. One question is there, that answer to that question will be provided by VAR. What is that question? What is the maximum amount I can lose from this particular set of holding within the next day or week or a month? So, what is the maximum loss we will incur on a particular day by holding those type of assets? Example, a bank is having investment. Bank has made the investment worth rupees 50 crore. So for 50 crore of the bank's funds are invested as an investment in different companies. Now, the bank wants to know what is the maximum loss we may incur on a particular day at so and so confidence level. Because 100% we are not sure. A bank cannot say that we are 100% sure that VAR of our business is 5 lakh rupees. That we will not lose more than 5 lakh rupees. Maximum loss we may incur 5 lakh rupees, 100% confident. No bank can say. Because future is completely uncertain. So we cannot predict for 100%. So we have to make a confidence level. the confidence level may be 95%, 98%, 99%, not 100%. For example, a bank will say, we are having investment of 50 crore and the VAR is 5 lakh. What does it mean? That means bank says the maximum loss which we may incur on a particular day at 95% confidence is 5 lakh. That means we are 95% confident that our loss will not exceed 5 lakh rupees on a particular day by holding an asset of rupees 50 crore. That maximum loss which we may incur is VR. So how to calculate VR? Statistical formula is applied. Now, to be precise, it is an estimate with a predetermined confidence level of how much entity can lose from holding a position over a set of time horizon. A time horizon may be on a day or 1 week or 1 month or 1 quarter. That means bank will say how much is the maximum loss we can lose on a particular day, how much maximum loss we may incur in particular week with 95% confidence level. So we need what is the size of the investment, how much is the holding we are having. Secondly, what is the confidence level. Thirdly, what is the time duration. These 3 things we require to calculate the VAR. Now, how much energy can lose, or the confidence level may be 95, 98 or 99%. The time horizon could range from a single day to a month to a quarter. So VAR gives you the answer regarding how much loss we may incur during a particular period of time, say a single day or week or month or quarter. And what is the confidence level, at what confidence level we are saying that this may be the maximum loss. Now next one is CAR. This is another technique of measuring the risk. Cash flow at risk. So CAR, cash flow at risk, is a probability that the firm will face cash shortage. Like VAR. VAR says what is the maximum loss we may incur. CAR says what is the maximum cash shortage. Actually, the logic of both VAR and CAR are similar. VAR says what is the maximum loss and CAR says what is the maximum cash shortage which a business may face during a particular period of time at so and so confidence level. That means a bank will say that our CAR is 5 lakh. CAR is 5 lakh for holding the assets for a period of time like 1 day and 95% confidence level. At 95% confidence level for 1 day, what is the maximum cash shortage we may face? That maximum cash shortage which we may face is called CAR. So, cash flow at risk is a tool used to measure the expected maximum reduction in expected cash flow resulting from an adverse market move within a given confidence level for a given period of time. Just like the VAR, for a given period of time at a given confidence level, what is the maximum cash shortage we may face? This is called CAR. So in this video, I have explained you 2 topics, that is risk identification and risk assessment. Hope the point is very much clear to you. So my suggestion, watch the video not once, twice and thrice, then only you can be able to get the points in your mind and confidently you can write in examination. I wish you all the best for your preparations. So if you're satisfied with my lecture, give a like to the video, share my channel among your groups, among your friends so that more students can watch the video and enhance the knowledge. Give your comments on these videos. I'm waiting for your comments and subscribe my channel if you have not yet subscribed, and by the super thanks which is given below my video. Inshallah, we'll take up the next topic in the next video.